Hi, good evening. This is Renugadevi. I belong to Business Administration Department and working as an assistant professor in Dr. SNS Rajalakshmi College of Arts and Science. In this video, we are going to discuss about the dividend income. So, dividend income, how it is reacted in the direct tax. Suppose if you are any person receive the other sources of income beyond that the dividend, that particular person, they might be invest their amount in the shares or debentures. At that time they might be receiving the profit. It's a share of profit will be received from the company, that is called the dividend. So that income is also taxable and per the Income Tax Act 1961. So that only we are going to discuss in detail in this video. First of all, dividend. It means that the share of profit distributed by a company to its shareholders, maybe in the form of cash dividend. It is paid in money. Okay. And then second one is interim dividend. Actually, this particular dividend, it is declared between the financial year. So there is a in between. We have to declare that amount shareholders will be followed. This is called the interim dividend. That is a in between. They are declaring the particular share dividend to the shareholders. The next third category is deemed dividend. Actually, this is the certain amount to shareholders treated as dividend under section 22 of E. Okay, so the deemed dividend is nothing but that particular payment will be treated as the dividend to the shareholders as per the norms based by the IT Act. So these are the three category of dividend provided to the shareholder. First one is cash dividend. It is paid in terms of money. Then second one, that interim dividend. This is declared between the financial year. Next, deemed dividend. This amount will be treated as a dividend to the shareholders' payment. Next, we move to how we have to make the treatment, tax treatment related to is an individual person. They might be receiving the amount. Okay, so the tax treatment since accounting year 2021 to 22, that is a we mention as the financial year is 2020 to 21. So as per this year, the tax treatment of dividend has been changed. Earlier, the companies paid dividend distribution tax. Actually, this dividend was exempted for shareholders. But nowadays, that particular dividend distribution tax is abolished. Based on that, in turn, the dividend is taxable in the hands of shareholder when they are receiving that particular dividend amount. They have to pay the tax under the income from other sources. So actually the previous year, that is 2020 to 21, that earlier year, that particular dividend will be paid by the company as a tax. But nowadays the shareholder, they have to pay the tax in terms of they are receiving the income from other sources. This tax at normal slab rate, it is applicable to the each and every individual person, that is a assessee. Next, we move to what is the deduction as per the Income Tax Act. So when individual person they are receiving a dividend at the time under section 57, the shareholder can claim the amount. Then interest expenses, based on this, the deduction up to 20% of dividend income will be declared. Then no other expenses like collection charges or anything will be allowed. Oh, these are the some deduction as per the note allowable by the Income Tax Act. Next, we move to TDS, tax deducted at source, on based on the dividend. As per the section 19(4), that is a 194, company must deduct TDS at the percentage of 10 if dividend paid exceeds 5,000 to resident shareholder. It's a PAN card is mandatory. The next, no TDS is if dividend less than or equal to 5,000 as per the financial year per shareholder. So more than 50,000 or 5,000 will be taxed as per the TDS calculation. For example, Mr. A receives dividend of 50,000 and paid interest on loan taken to invest in shares 15,000. So as per this problem, the deduction allowed 20% of the amount 50,000. That is 10,000. So here the taxable dividend is 50,000 minus 10,000 equal to we are getting the 40,000. That particular amount will be added to the total income taxed as per the slab.